Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is May 7th, 2025, and we're going to have a gold price update. We have gold that is about $100 below the all-time high, which was set 2 weeks ago. So let's talk about what we are seeing here in the gold price itself, the single most important market in the entire world. Whether you're investing in gold, whether you're investing in gold miners, whether you're investing in silver, whether you're investing in silver miners, the gold market itself is always in the leadership role. So let's focus on gold first, and everything will make much more sense. Make sure to hit the subscribe button and the bell icon so that you'll be notified when these videos come out. If you have a minute to give it a thumbs up, I would very much appreciate it. It does help the algorithm here if you do that, so thank you. Last but not least, make sure to follow us on X or Twitter at iGlobalGold, because sometimes I don't have a chance to post here on YouTube for several weeks, but I make quicker posts during the week on X. Let's look at the gold price, our legal disclaimer. Now, when we look at the short term, you can see a lot of volatility here in the gold price. We're looking at the last 2 months since mid-April. The short term, it's sort of easy to look at this and say, hey, it looks like gold made a lower high. It looks like gold made a lower low. If we look at the overall pattern, can we say to ourselves that gold is in a new downward trend? Possibly. Over the very short term, that may be the case. However, this is when it is valuable to take the chart and zoom it all the way out. And we were just looking at this, right? We were just looking at that little red shaded box there. So, look, big difference between a short-term downward trend and what? The longer-term trend? Clearly moving from lower left to upper right. That is exactly what we wanted to see. Let's talk about what we're witnessing here on the longer-term gold price chart. So, the first thing that we want to do is start paying attention to the most significant multi-year peaks that gold has made here over the last 10 years. So let's talk about the first major peak. I'm not choosing these arbitrarily. The first major peak here was in 2016. Remember, gold bottomed after a 5-year bear market in late 2015, and then it surged about 35% up to this major peak in 2016. That was the first major peak. It then consolidated for 3 years sideways. And after it broke out above the 2016 peak, it made this major peak in 2020 at $2,070 per ounce. This is the first time that gold was above $2,000. So if we look at these two major peaks here, 2016 and 2020, and we just draw a straight line between them, so far this is not rocket science, but I see a lot of people kind of getting mixed up as to which are the major peaks in gold. It's 2016 and 2020. And then what if we just say we're going to continue this exact line, which is clearly a resistance line, right? Gold backed off from this peak and it backed off from that peak. So we just say we're going to extend the resistance line, exact same slope, no change. And we just want to wait. We just want to see, hey, what happens if we extend the resistance line for gold up, up, up? Look at this. So look, we drew these 2 points here. We drew the line between the 2 points, and all we did is extend that line. Isn't it interesting that right here in 2024, gold hit that exact line from 5 years prior, and it backed off once again? Can you see that? So clearly, for whatever the reasons, there were sellers in this market. We can extend this analysis. We can clearly call this a resistance line. Clearly, there were sellers of gold in this market that were simply exiting their positions or trying to keep the price suppressed, all of the above, along a single line. We can see 1, 2, 3 times that they tried to do that, all along a single line. Okay, stick with me. So what if we just then continue this resistance line, extend it outward, exact same slope, no change in the slope. We're saying, hey, if on a best assessment, these sellers existed along a single line, what happens in the future to those sellers? Notice that right here where my mouse was, finally, the gold market was able to break out. It was able to break above the line of resistance, the line of the sellers. So a new paradigm here in the beginning of 2025 has emerged. We had a breakout above the 10-year resistance line. So remember, we can talk about gold being in a short-term downward trend, but we have a 10-year resistance that is broken higher for the gold market. Now notice with me right here, notice after the breakout, look at what gold did right here, right there. You see that? The big blue arrow? Notice how after breaking out, gold came right back and it retested this resistance line, except this line acted as support about 3 weeks after the breakout. Do you see that right there? Very, very interesting. So for those of you who like to study this kind of thing, who like to just say, hey, let's not leave the markets up to the whims of the powers that be, up to those who are trying to manipulate the price, let's actually study the price and see where they are emerging. This is a principle that you can use going forward, not only in the gold market, but in all of your investment activities. And the principle is this: resistance. We talked about this being a resistance line. Once broken, right here, the breakout tends to act as support. So perfect case in point right here. We had a 10-year resistance broken out, and then what? The buyers stepped in where previously the sellers existed, and this line has now turned into support. So this is a very important principle to remember for the rest of your investment career, no matter which market you are analyzing. Okay, this is now support. So if this is support, what do? We say, where does the support now exist, given that this trend continues to rise and rise and rise and rise in time? Well, right now, I've measured it, right now, the support exists exactly at $2,875. So what we're going to say is, yes, there could be a little bit of a short-term downward trend here for gold, but on the longer term, we have a 10-year resistance that has broken out just half a year ago, already acted as support once, and this should be expected to act as support going forward. So we talk about what is the expectation for physical gold here. We are in the green shaded zone until proven otherwise. And what would it take to prove us otherwise is a violation of the support at 2,875. This is the big picture analysis. This is what really matters for the gold market here from the longer term perspective. So, as a technical analyst, I am open to the possibility that within this green shaded zone, anything could happen, literally. Gold could go straight higher from here, for all I'm concerned, or it could back off, bump around the support here over the course of the next year, and then rise as we get into 2026 or early 2027. I'm open to anything within the green shaded zone, with the key point being right here, that this support at 2,875 is the most important longer-term support that we are looking at from the 10-year perspective. We've had the breakout. This should now be expected to act as support. Yes, from the current price just below 3,400, this gives us about a $500 buffer room. So remember that. Gold could be very volatile within about a $500 band, Key support is at 2,875. And remember, this support is rising in time, rising. And so we will have different numbers as we go forward. But this is the most important point to understand about the gold market right now, where the support lies. Okay, very good. Now, if we were to back this out to the long term, we were just looking at this, but what if we talk about the very long term? Let's talk about going all the way back to the beginning, when gold began to be freely traded, 1971. So boy, this puts it in a different perspective. How about that? Aha. This will be coming soon. So make sure that you subscribe. Hit the bell icon so you don't miss this longer term analysis when it comes out, and follow us on X. Otherwise, you're going to miss it. And we can see very clearly that these markets are respecting the support that exists on the chart. You can fill in as many fundamental reasons as you want to. The market is respecting the support that we are able to see on the charts. If you don't want to wait for that longer term analysis, we have already revealed this to our premium subscribers on Precious Metals Intelligence Plus. You just go to our website. You can subscribe today and see the longer term analysis. This includes weekly premium videos just like you're seeing, but they tend to be 60 to 90 minutes in length every single week. We cover not only physical gold, but physical silver, the mining sector. We cover the U.S. stock market, the currency markets. We cover Bitcoin. We also reveal the exact positions that we are buying and selling at the exact moment that we make those decisions. You receive a flash update right to your inbox. You also have email access to me directly if you have any questions about anything related to the precious metals market. That is called Precious Metals Intelligence Plus. You cannot be an informed investor in this market without this. If you are a higher net worth investor, you have to understand the power of these private placements. In our service called Elite Private Placements, we buy gold and silver mining companies, but we do it at more favorable terms. And that's because there's a minimum amount to invest, which is typically about $7,000 US. And if you can invest that minimum, you get free warrants, which get you nearly twice as much upside potential compared to buying these same mining companies in the open market. You get that additional upside potential for free because you're committing the minimum to invest in the private placements. I want to let you know our next private placement is going to be with a hugely undervalued gold company that has almost 1 million ounces of gold already in the ground, and it's being given away for pennies on the dollar. I will reveal that over the next couple of weeks. You also get a free subscription to our Precious Metals Intelligence Plus, so you will not miss a single thing if you join us in the Elite service. Last but not least, if you would like to discuss your unique situation with someone who approaches this market from an independent standpoint, I do not take any fees or kickbacks from any of the bullion dealerships or any of the gold mining companies that we work with. I am 100% independent, so I can give you my perspective, whether it's good, bad, somewhere in the middle, adjustments to make, different options to consider. You can book a consultation right on our website on the consultations tab. No matter how you choose to go forward, if it's to subscribe, if it's to follow us on X, if it's to join us in one of our premium services, or if it's to sit down and have a conversation with me, Christopher Aaron, directly, I look forward to working with you. Remember, gold is in a long-term rising trend. That analysis is valid until proven otherwise.